we were able to make over 30% margins in Washington, wholesaling flower for under $1,000 a pound. So we have a real expertise that's tried and true, that's driven results in a very tough market, and we're bringing those to less competitive markets.
My next guest is Andrew Toot. He's the Chief Investment Officer of 4Front Ventures Corp, trading on the CSE under the symbol FFNT and trading in the United States under the symbol FFNTF. Andrew, welcome.
Thank you for having me.
Great to have you here. Andrew, can we start with an overview of what is the situation with the company now that the co-founder Chris Kane has now stepped down and Leo Gontmacher is the CEO?
Yeah, Leo became CEO in the late winter, early spring of 2020. And Chris, who is a dear friend, a large 4Front shareholder, was really critical in the early part of 4Front because he really is a world-renowned expert in setting up regulatory bodies around cannabis, and navigating the regulatory regimes in each state. Chris was really critical, and as the company has increasingly focused on the nuts and bolts operating in the cannabis industry, it was a good time for Chris to kind of go and pursue some of the other things that he was wanting to do around social justice and advocacy. So Chris is still very big shareholder of the company, and is still on as a consultant. I spoke with him last week, so it was kind of the right season for him to go off and do some other things that he'd been waiting to do.
Right. Okay. Well, good for him. Let's move now to the most recent financials. You reported a net loss of $6.2 million US in Q2. How is the outlook for profitability going for 4Front?
Well, from a cash flow standpoint, from an operating cash flow standpoint, we were positive several $1 million. From an adjusted EBITDA standpoint, we turned profitable in Q3 of last year. So we made great strides in streamlining the business, making sure that the cost structure was streamlined as well as we came out of 2020. And we went from a company that was burning about $3 million a month in January of 2020 to one that flipped to EBITDA positive in Q3. So we've continued that trend of having operating cash flow from operations positive. And we are awaiting two critical things that we think are gonna inflect that meaningfully higher, our cash flow profile. One is we're opening our third dispensary in Massachusetts, in Brookline, which we opened on this past Saturday, which we had a very strong opening weekend, which we were pleased about. And then the second critical component of that is we're opening what we think is the largest cannabis processing factory in the world, 170,000 square feet in Commerce, California, which is. We have been waiting on final inspections from the county, the fire department in LA County for about 6 weeks now, and we're hopeful that we're close to the end there. But really, entering the California market, which is one of the largest cannabis markets in the world, with what we think is a very disruptive, low-cost production facility. Combined with the opening of our third dispensary in Massachusetts, we're pretty excited about the ability for cash flow and our EBITDA profile to inflect meaningfully higher.
Sure. To put it in perspective for our viewers, the California market reported $5.1 billion in sales for the month of July, and all of Canada reported a whopping 300 and some odd million. So. Really huge market. Is that 170,000 square foot facility strictly an extraction and concentration facility, or?
It's all extraction and producing our 25 plus different brands of product. And, we have over 1,000 different SKUs that we're gonna put into the California market. The interesting thing about 4Front is we're one of the few multi-state operators out there that have proven our ability to successfully compete in highly competitive markets. So our first facility was in Washington State. And that facility is the number 2 flower producer and the number 1 edibles producer in Washington State. Most competitive market in the country, where it's also driving very healthy EBIT margins. And so because we've sort of perfected highly automated facilities and low-cost production, we thought we were uniquely qualified to enter the California market, where, frankly, operators have had some trouble given the slow rollout of the legal market, given the prevalence of the black market and the gray market there. And basically, what I want people to take away is we think that we can come into California with our low-cost production. We can undercut even the black market cannabis producers by 20 to 30%, and we can still make over 30% EBITDA margins in that state. So we are just chomping at the bit to get that facility open and up and running, because we think it's going to be very disruptive in that market.
Sure, it sounds like a game changer for 4Front as well.
It is. Our goal is to have scaled production in every state that we're in, and so we announced last week that we broke ground on a massive facility that we're opening next year in Illinois, in addition to the smaller one that we already have. We also are building out our footprint in Massachusetts, where we want to be a scaled producer there, where we can wholesale all of our products. And obviously, California is a big piece of that puzzle. And the only other piece that we're waiting on currently is we have a license pending in New Jersey, which we applied for in 2019. We've been waiting almost 2 years to hear. And our feet on the street in Jersey think that it's coming in early September. So if we could win that license, we would have just an even more robust portfolio that we could bring our low-cost production and products to.
Yeah, interesting. So then the market for your products, I've got to think, in those key markets is getting very competitive. How do you sort of expect to mitigate the growing competition from well-funded multi-state operators such as 4Front?
I think that the key to cannabis right now, and where we think the sweet spot is in the value chain, is in being a finished goods producer. It's not being a farmer and being a cultivator, though you have to do that in certain markets where you need that biomass. But the real key to cannabis is having low-cost production. And the reason for that is because there's so much price elasticity in cannabis end markets, meaning that if you can give a consumer a quality product at a much lower price, you take outsized market share. And that's what we've done in our facilities in Washington. We started to take meaningful market share in Massachusetts, and we plan to do that in Illinois and California as well. And so price really is our brand. And that we think that brands at this point in the cycle, or at this point in the maturation curve for cannabis, are largely overrated. If you can give customers a really quality product at a great price, you're going to take share, and you're going to do it without signing up, XYZ celebrity. And so to offer customers that low price quality product, you have to have your low cost production dialed in. And I would submit that a lot of the competition haven't really had to think about how to get cost out of their production yet. A state like Massachusetts wholesales flower for roughly $3,500 a pound US. We were able to make over 30% margins in Washington wholesaling flower for under $1,000 a pound. So we have a real expertise that's tried and true, that's driven results in a very tough market, and we're bringing those to less competitive markets. And we think this low-cost production is a huge differentiator for our value proposition.
You bet. So it sounds to me like, the sweet spot being in finished goods is the result of, the brand experience that still defines a lot of consumers' preferences. Brand experience obviously modulated by price. Do you think that there's a future risk of the commodification of finished products as well as bulk flower, bulk biomass, as the markets become a little bit more sophisticated, a little bit more saturated?
I do. I think that there's going to be a certain commoditization of all products, but what I think that is fascinating, and I was just on the West Coast vacationing with my family and was able to pop into a couple of dispensaries out there, and you can get an ounce of flower for $30, and you can get an ounce of flower for $290. And so what you're starting to see as the market matures is almost a barbelling, where there's a mass market product, and then there's kind of a premium product. And I think that we're able to sort of be that mass market product where you're seeing 80% of the consumption is from 20% of the consumers. And so that's really the sweet spot where we want to play right now. I think once the markets continue to mature and customers continue to experiment with the different form factors, what works for them, I think that there will be more brand loyalty as we move out. One of the things that I always say about cannabis is with alcohol, when you draw that analogy to alcohol, there's been so much experimentation that we've had over our lives with alcohol. I know that I don't like gin, and I know that I like tequila, and I know that I like to drink a Coors Light on the golf course, not a heavy IPA. And all of that experimentation that is just ingrained in our culture with alcohol is still going to happen with cannabis. And I think is when people figure out what they like and they're going to have consistency of experience and consistency in that product, then brands will really start to flourish. But as it stands, I think that the bulk of the market right now is shopping on price. And if you can give them a good product at a great price, you have a huge leg up.
Okay. Well, Andrew, we're going to leave it there for now. Sounds like you guys are making fantastic progress. I'll look forward to talking to you again in the near future. Thanks for your time today.
Thanks for having me. Always a pleasure.
You bet. Bye for now.